DIME method is a strategy that financial advisors use to understand how much insurance we should be giving our clients. And it's a very simple thing to understand. Okay, so the DIME method stands for how much debt do we have? What's our income? Okay, what's our mortgage if we have any? And either final expenses, or do we have to pay for, education for our children? And so if I'm going through this with a client, the first thing I'm going to ask is, outside of our mortgage, do we have any other debt? Maybe we have some credit card debt or some car payments, or, maybe a loan or a line of credit. Let's just say we had, $10,000 on a credit card, okay? And our income. So if I asked a client and they said, okay, well, we make $50,000 a year, and if something happens to us or if something happens to me, I want to make sure that my wife is taken care of for the next 10 years. Okay, I would take this number and I would multiply it by 10 for a $500,000 number. My wife and I, let's just say that we have a mortgage. If we had a mortgage, say $250,000, we want to make sure that that gets covered as well, so that if something happens to myself, I want to make sure that the mortgage is covered so my wife has no payment. And then expenses in education. So if we have children, maybe we want to leave a little bit of money for a college education or a university education. These two numbers are a little bit kind of, arbitrary in the sense of, how big is the funeral going to be? What's it going to cost us? The cost today is going to be different than the cost in the future. But let's just say, we wanted to put, an extra $50,000 aside to pay for a funeral and some added education for our children. So if we added all of these numbers up, we should be getting, so 500, 750, 8, call it $810,000. Would be the amount of insurance that this client would be looking for if they were in this scenario. Once we have that number, now we can start to build out, what does an insurance policy look like? Should we have some term 10? Should we have some term 20? Maybe we should have some permanent insurance, because we don't really need all $800,000 for the next 30 years. We need a little bit now. We need a little bit, for the next 10 years and so on. So not just getting the right amount of insurance, but making sure that the insurance policy is built properly. If you're looking for any life insurance, or you want to make sure that the current insurance you have fits what you need, please reach out to us. We would love to chat.